Let's move on to the market or the stock market. What do we mean by that? What is the stock market? It literally is what you think it means. So in the beginning, when the first stock markets were formed 200 to 300 years ago, they literally were like the markets that you go to buy your groceries and household goods, etc. A room, a place where traders, investors would gather and face to face would buy and sell shares or stocks. It's as simple as that. That's how it all started. Now, today, that kind of physical gathering, open outcry doesn't really happen. Most of the world's stock markets are now totally electronic. Brokers, the people that buy and sell the shares on behalf of you as an investor, don't need to physically be together. They don't meet face to face. Everything is done online, electronically. Brokers are spread out around the world. You as an investor, me as an investor, we're spread out all around the world. So the geographical proximity doesn't matter anymore. So that's where it all started from. There are a number of stock exchanges around the world. And the very first one, I believe, one of the first ones was in London. Started off in a coffee house in the center of London, where basically brokers would come together and buy and sell shares of companies with each other. And behind those brokers would be investors who would actually become the ultimate owners of the firm. So that's essentially how the stock market functions. It's a collection of exchanges which are now electronic, where investors and intermediaries can buy and sell shares. Now, most stock markets open for a period of 6 to 8 hours per day. So, for example, in London, the stock market will open at 8 a.m. and then could close at 4:30 p.m. New York, the New York Stock Exchange is slightly shorter in terms of hours. But essentially, all of the stock markets will operate for the typical working day, depending on wherever they are. The stock exchange, the stock market, is basically a place where stocks, shares are exchanged. Buying and selling is a form of exchange. And this is exactly how it started off from, and this is exactly how it is now. One person, one broker, one party will sell some shares, and those shares will be exchanged to the other party which wants to buy those shares. So cash goes in one direction, the actual stocks go in the other direction. Simple as that. It's an exchange. Now, you and I, as private investors, we don't normally get to go to the stock exchange. And even if we are now talking in the electronic world sense we don't go onto the exchanges directly ourselves. It's brokers, stock brokers, that actually use the stock exchanges. So in the olden days, the brokers would go to the actual stock exchange building physically, and they would have a collection of orders from the investors that they represented, and they would be buying and selling the shares amongst each other and then registering them in the names of the individual investors. As I said to you earlier, these physical exchanges don't really exist now. Everything is done electronically. Yet we still have stock brokers. So the brokers themselves will have membership, electronic membership of these exchanges, and they will act on your behalf to buy and sell your shares. So the concept of exchanges has gone from physical to online, but brokers do exist, and they've gone from physical presence and transactions to doing things online and electronically. So two things covered there: stock exchanges, where they came from, what they are now, and brokers, people who buy and sell on your behalf. Okay, but where do you come in? So you as a private investor can't go to a stock exchange. You're not allowed because you're not a registered member of it. So you have to go through a broker. But where is your money held? Where are your shares held? Where is the certificate held? Let me explain that. So each one of us, even businesses, but each one of us can have one or more dealing accounts. So it's an account, like a bank account, which is in our name. We deposit money into it. And if there's cash still left there, we can take the money out. The money in there, in the dealing account, is not meant to be there and kept as cash forever. That would be pointless. You just have a bank account to do that. The money you have in your dealing account, you give an instruction to your stockbroker to say, I want to buy shares in company X, which trades on exchange Y. And here is some money in my account. Please take that money or some of that money and buy shares in company X. Your stockbroker has access to that dealing account and they trade on your behalf. So they will take money from your account, send an instruction to the exchange to say, I want to buy 200 shares in company X, for example, and the transaction takes place instantly, pretty much. It's real time now these days. There isn't any lag. In the olden days, this could obviously take 3 or 4 days. There'd be a turnaround between instructions being passed from investor to broker and the transaction taking place, etc. But now it's all instantaneously within the blink of an eye. So that's where you come in now. You have a dealing account, you deposit money in, you give an instruction for that money to be used to purchase shares. The shares then are registered in your name, and within your dealing account will be a record to say you are now the proud owner of 200 shares of company X, for example. You can reverse that transaction in the future. You can say to your broker, in my dealing account are 200 shares. Please, can you sell them on the market at a particular price, whatever the case may be, and convert it to cash. So your dealing account holds all of these things. It holds your cash and it holds your stock market investment, your shares. So that's important. You have a dealing account. You probably have multiple dealing accounts, actually. You can have multiple dealing accounts. Sometimes you're forced to, depending on something I'm going to talk about in a minute. Other times you choose to have multiple dealing accounts. Okay, so that's that side. The next thing then is, what sort of dealing accounts can you have? So I'm going to talk about this from the perspective of maybe a UK investor, but the same thing applies whether in the US, whether you are in Hong Kong, Singapore, Asia, Canada, wherever, Europe, it doesn't really matter. So from the perspective of a UK investor, here are the 2 types of accounts which most people can have, and if they do invest, will have. So the first account is an account where you earn money from your job, your career, your business. You pay the tax, and then whatever's left, you can transfer that into some sort of dealing account. So that's basically post-tax funds going to this dealing account. The money in that dealing account, then you can buy and sell shares. And typically, because you already paid the tax up front, any gain that happens, any income that happens within that dealing account is tax-free. So dividends that come in, not subject to income tax. Any capital gains that happen within that account are not subject to capital gains tax. So that's a dealing account where the money's gone in post-tax. On the other side, you can have a dealing account where the money goes in pre-tax. So if you go to your job, you earn, say, £10,000 in a month, for example, or a period of time. Some of that money can go straight into your pre-tax dealing account. This is typically known as a pension account in the UK. So the money's gone in tax-free, and the money can grow within that pot tax-free as well. However, when you come to withdraw the money, then it's subject to tax at your marginal rate. So it's basically money's gone in pre-tax, but money comes out post-tax. So just bear this in mind. So you can have dealing accounts which do different things, and normally the only distinction is whether the money goes in pre-tax or not, and whether the money comes out tax-free or gets taxed on the way out. Simple as that. So in the UK, we have ISAs, we have pensions. In the US, you have your 401ks, you have your Roth IRAs, and a few other accounts as well. Other countries around the world have very similar things. So if you are going to do some homework from this exercise, number of things you want to do if you're just becoming an investor, you're doing something from the first stages. Find a broker, first of all, who you like, someone who has got competitive fees, and someone who can invest in the markets that you're interested in. Then decide what type of account you want, or even before you choose a broker, decide what sort of account you want. Do you want a normal account where you can which you can use pre-retirement for taking money in, putting money in, taking money out, etc.? Or do you want a retirement account, which is something you would access later on in your life? Most brokers provide both types of accounts and many others. You've just got to find the one that works for you in terms of convenience, access to particular markets, their fees. Watch out for the fees. The fees can vary massively and can eat your account if you're not careful. So bear that in mind. So there you go. So that was a summary of the market, the stock market. It's literally like a market. It's a place, which is now electronic, where you can buy and sell shares and you hold them within particular dealing or trading accounts or investing accounts. That is the stock market.